there will be positive spillovers from the US. The fact that there is a significant stimulus in the US will boost global GDP, will boost exports from the euro area. Of course, the initial impact was visible more in the financial market, but over time, as the stimulus gets rolled out, it will be a significant engine for the world economy. I would emphasize, of course, given the nature of the US, that you can have very large fiscal packages embodied in a single piece of legislation. As you know, in the European situation, we have a mix. We have 19 national fiscal policies, and then we have the joint fiscal action. So maybe it's worth keeping in mind the statement from the Eurogroup from a couple of weeks ago, which heavily emphasized that the Eurogroup collectively are paying close attention and essentially committing that there will be an agile fiscal response in recognition that as this pandemic unfolds, it is very important that fiscal support is maintained and that there is no early exit. So I think, and then maybe you see every week or every few days, a fiscal announcement coming from individual member countries. So, I mean, I do think the forward guidance is there from the Eurogroup that the scale of fiscal policy will respond to the unfolding of the pandemic. But I do think it's for all of us to reflect, the parameters of the fiscal debate have clearly moved with the US decision. And it is an important issue for European policymakers to reflect upon about how to calibrate the European fiscal response to make sure it's sufficient to get through this pandemic.
So in other words, the longer the pandemic lasts, the more or the higher the pressure also on Brussels to think about increasing the package?
Well, I mean, I think there's a range of possibilities. And of course, we also have to do the basics of making sure that the recovery plans are finalized, that's been, has been a heavy focus of work in recent times. So again, the combination of national fiscal policy and EU level really has to be set so that as the pandemic unfolds, fiscal policy is agile. And I think that is the commitment of the Eurogroup.
The fiscal response clearly is a huge step for the European Union with these next generation EU bonds. And this would probably also mean that we are going to have a proper European yield curve at one point in time. Is that something which makes monetary policy easier?
Of course, the significant bond issuance that's envisaged on the next generation EU, and the fact that it's going to have a whole range of maturities will be helpful in deepening the stock of safe assets in the euro area. It will be an important reference point. But I mean, I would try to avoid arguing that there needs to be one single reference point in thinking about the pricing of European assets. So I think the nature of Europe is it's always going to be a mix of EU level and national level fiscal policy, and how we think about the stock of safe assets, how we think about reference points, I think will reflect that. I mean, as we've talked about earlier on, we essentially are jointly looking at the risk-free curve, where we often use the overnight index swap curve as a kind of useful proxy for that, but we also look at the whole constellation of sovereign yields. Now, when we have more EU issuance, we already have the SURE bonds. I mean, I think it's super informative, super helpful to have that. But I think that the overall message is the stock of safe assets in Europe is going up, not just because of the EU level issuance, but because of the declining risk premia for many sovereigns in the euro area.